Good morning, everybody. Thank you for joining. I see 8 people bright and early today. Ready to go. Ready for a plan. Ready to make some money. You guys hear me all right? Morning, Vishwa. Thank you for joining. Good to see ya. You guys hear me? Get a little mic check, mic check. Too loud, too quiet? Couldn't wake the family up with grinding coffee beans, so I am going with the tea today. See what we get. All right. K-Dog, what's up? Thank you for joining. See what we get here for some action this morning. So far, it's been a pretty steady grind up, it looks like. Kind of tested into the upper bounds of this range here. From a positioning standpoint, if you guys can see what's on my screen anyway, it is threadbare. Victoria, couldn't start our day without you. Thank you for being here. Monique, you don't see or hear anything? Just want to confirm you guys can actually still hear me. Monique, I don't know if you might want to refresh the stream. All right, Yayita, thank you for being here. Thanks for joining, guys, on this Tuesday morning after a pretty uneventful overnight session. Just kind of a steady grind higher by about, what do we got here? 20 something points. Kind of hitting this little bit of a wall here. I think if you look at yesterday, this is kind of where we battled to hold on before we made the drop. Again, I will tell you guys what's on my screen from a positioning standpoint. The story is that we're pretty empty. I've pretty much got my indicator set to show us position sizes of 1,000 contracts or more. And the fact that there's so many that don't even qualify or come close is pretty shocking to me. I would expect ranges that thin in the overnight to kind of not necessarily contain us. Again, each night is different. Globex, London, Asia, your mileage is going to vary. I do think we're at the point now where there's probably some macro stuff that's going to start affecting the market and how much we're really going to expand or move. We do have a big data or set of data prints coming in on the day. So we'll see what we get with regards to ADP information. I think we've got services PMI or something along those lines. I'd have to double check, but that kind of stuff can actually weigh on us, in the overnight. People don't really want to hedge too strongly either direction if we've got something kind of lingering out there. So we'll see what we end up getting. I would say for me, what I think is interesting is even though the positions are thin, if you look at kind of what we did, we pretty much held the have to hold it before it drops into this broadly negative positioning below. Kind of tested up, rejected this, claimed it, and made it a support. You'll see every time we dip down to it, we ended up getting bought back up. We got one here, got one here, and now we've expanded and tested the top of this range where there's a little resistance here. Again, these are not big positions. If I zoom way in, maybe that gives you a little bit better sense of what we're dealing with. But the big test on the day for me is what happens up here at 75.80. Hey, good morning, Con. Thanks for joining. Monique, hopefully you can hear now. But yeah, guys, this is kind of where my head is at on the day is, are we going to get up here and make this test? Do we reject it and come back down through this range and kind of hold the overnight open? Do we kind of get this expansion higher? Do we have this range up here that we play in, back up at all-time highs? So we'll have to keep our head on a swivel and see what we get. I want to double check here. The current straddle price on the day is pricing in about a 30-point range conservatively. You could always get more than that, obviously, but 30 points, if we were to open right now, would kind of put this 72.90 in the crosshairs. And then if we were lower, obviously we'd probably be down here about 72.20 or so. So I think with regards to ranges, if we want to draw something on the chart and kind of say, from a straddle perspective, what are we looking at? The straddle is essentially saying about this, okay? Where we actually open in a couple of hours will obviously go a long ways to telling us what we're more or less likely to price in or get. Good morning, Voltrandolo. Hellboy, everybody's showing up. We got the regulars, the diehards, waking up extra early. I'm Central Time, guys, so to me this is butt crack of dawn at 5 a.m. So wherever you guys are joining in the world, I appreciate you being here. Hopefully we can come up with a little bit of a plan of attack on the day. If you're just joining, kind of going over what the current overnight range has looked like, what the positioning is setting up to do, and keyword is thin, thin, thin. So as far as influence goes, I'm paying closer attention to kind of these bigger strikes. Noon. Yeah, I can't imagine. So yeah, I do think I am going to be watching mainly for what happens up here if we get there. And then watching this kind of overnight open 72.35, 30-ish area as kind of my support on the day. It's tenuous, it's thin. Obviously, any volatility is going to go a long way. So we'll have to pay close attention to that, just like yesterday. And maybe this is a good opportunity to look back at yesterday. If you guys are new to what I do and what I look at, we will go ahead and go back. We'll look at the regular hours from yesterday, and we will turn yesterday's pre-market positioning on and kind of explain the what and the why, okay? So you can see right off the bat, yesterday compared to this morning, the thing that stands out the most is we actually had some much larger positions on the board, right? And then a lot of thin in between. But even though things were thin, they were kind of stacked into these zones. So if we're going to do the same thing with regards to ranges, this was range 1. We'll say this was kind of the upper range up here. Let me get rid of this magnet. Okay. To test into. And then we had this little danger zone down here to fall through, right? And then the real danger was much further below, which we never really ended up testing into. Okay, so if you guys didn't see any of my recaps, hey Carrick, thanks for joining. Good morning, good morning. Just gonna do a little recap from yesterday, and let's look at yesterday's opening print, which was right about here, okay? We opened right in the middle of this zone, and whenever you see a bunch of dealer longs, regardless of the amount of contracts, when you have a range of just green like this, what that means is each strike, the expectation is they're selling against the move. So what you would expect when you're in a range like this, number one, is if you open inside of it, you're probably going to get an immediate sell at the open. If you don't, and you just get a rocket right up through this, that means the market bid is really strong to move against that kind of selling pressure. Again, these were mostly thinner, smaller sizes, because, you know, for scale purposes, you can see that this was like 1.5 thousand, as opposed to these are probably 500, couple hundred, 500, 600, 800, couple hundred, all mixed in here. But the story was my expectation coming in, again, I'm on a 2-minute chart. So from the open, I was just looking to see, do we hold this bottom strike? If we do, I'm looking to long from here. So I actually took a long on ES yesterday, right from here, 72.50, expecting us to test the top of the range, best case. We got that. 20-point safety trim. What I was really hoping for was we busted out the top of this range, tested this, held the 75, 70 area, moved through this, and got the acceleration into this upper range. Best case scenario, that was my plan. But what I was also paying attention to is, what if we fail to break out of this range? We can grind and go slower down, but the only thing that's going to carry us out of here is if volatility picks up, right? And I want to see what happens if we get some selling pressure, because this is like the air gap. This is where we can move quickly, as opposed to through here, things tend to move a little bit slower. So when we got this little volatility spike here at the start of the London close period, right? I was looking to see any failures to move higher to the end of this range. I was willing to risk a stop up here, essentially saying, prove it to me. Prove your strength to me that you can break out of this grindy, choppy range. It took you an hour and a half just to get to the top of it. You couldn't break all the way out. Now you're going to have to prove to me that you can. So I'm happy to go short, even just to the bottom of this range. If I can catch 20 points or more, that's great. Being able to catch a potential 60 to the bottom of this, where the big support on the day was found, absolutely I'll put risk on for that outcome. So even here, if you just shorted the break of this zone to see if we could test down here, again, that's a healthy 20 to 30 point move. So I ended up catching the 60 points here, but what you can see is once we got down in this range and we got the finish of the London close right about in here, we kind of did this choppy, grindy mess. And what the intraday positions look like, which I tend to look at right after the London close period, once all of that action is out of the market, I want to know, how are we setting up for the afternoon? So while the pre-market profile kind of dominates my thinking and my plan, what I'm also really paying close attention to is how much did the intraday positioning shift? And yesterday what happened that was interesting is this right here, these two strikes at 20 and 15 ended up becoming dealer longs, meaning this whole range down here was pretty supportive. So when we got this big initial volatility spike on a sell down, it got snapped back up, which you would expect if this range and this size of contracts in this zone behaves the way that mechanically you would expect it to. It would absorb volatility. It would slow that selling pressure down. So if you were too long, this would actually be a pretty safe spot to do so. You've got really great defined risk to reward. You would be able to essentially just put your stop right at the bottom of this range, give yourself 10 points, 5 points, depending on where you entered here, and just target this as your test. And if it pushes through here, you also know it should accelerate to the top of that range until it meets another resistance, which we found, right? That's a 30-point move or more, depending on how low you got in, right? But that is kind of how I look at these ranges as opportunities. So when I draw these little bubbles, these ranges, I'm looking at those as zones. And what behaviors am I looking for in those zones? This is where I would expect things to move around a bit. There's no real structure except for on the top and the bottom. And if the strength is real, I would expect it to kind of grind back up through this range up here, because this I know is just like it would have been in the morning. It would have taken longer to get through it or into it even. But once we got there, this is again, if you didn't believe in the strength and you saw that volatility going higher yesterday, could have easily just rejected this and played this entire range the rest of the afternoon. Obviously, we kind of got chopped to death right in the middle. But what I think is interesting about that is, again, on the intraday profile, this ended up becoming more supportive. Okay. But the rest of the profile did not really change. So the pre-market in general kind of rules the day from my framework, how I look at it. But yesterday was a really great case study for the respecting of these ranges and the expected behaviors in them. You had multiple attempts with really great defined risk to reward to say, if we sell from here, and I am expecting selling, you could have targeted this early. You would have just had a stop of like just over the opening print. That's pretty decent risk, right? You could have even just used this as this kind of bigger middle strike at 72.60 and said, I'm willing to risk 5 points to see if we sell through. Obviously, it did not do that. It ended up going higher. But any failures up here to break out of this range, you can just play the bottom of that range. And if it breaks out the bottom, you get the extra reward. So you just got to kind of know the animal you're hunting, know what these behaviors are in the profile, and go from there. Hey, oh, nice. Yeah, I mean, there was really great opportunities yesterday for two-way trading. You could have been extra patient and said, I'm not comfortable longing anything unless it's at like the biggest support on the day. The risk yesterday was actually if this didn't contain the volatility and VIX kept spiking and people kind of capitulated and got worried, they panicked, the fear was setting in, then you had kind of this big range down below. But what we also know about this kind of territory is if that volatility isn't spiking and persisting and the selling pressure isn't keeping going, it's just going to drift us back up, right? Because everything that isn't in the money down here on the put side, let's say, those decay up. If they're out of the money, they're not really impacting price action. They're not giving us that room to sell through quickly because they're not activated, is what I would say. So the same reason why we fell through this middle zone so quickly, if we never got down here and touched this, it just would have made this zone that much more supportive into the afternoon to kind of drift us up into this range. Okay, so that being said, we're going to go back and we will just look at today's positioning. Okay, I'm going to get rid of my little drawings here and we will look at the current market move. And again, we are just oscillating. And again, I'm on a 2-minute chart just to try to get some scale here on my indicator. But the fact remains, we are in this little zone. We're coming up on kind of a resistance, if you want to call it that. But I do think the big test on the day, once again, is going to be this up here. This will be our upper range. And then we've kind of got these little ranges in here, I guess you could say. Maybe we can do it more like this. Kind of resistance to support. And then you've got another one, obviously, down here. And if you go much further down, I think if you were on Ron G's stream last night, you kind of heard me talk about the real biggest positioning isn't for 100 points lower. Do I think we get down there? No, not without like some serious help, a lot of volatility to send us through this range. And again, just because these positions are here doesn't mean that's the only action in the market, right? What are the white dotted lines at the top and bottom area? Oh, I think those were just, I think that's just an old alert, honestly. We'll get rid of that so it's not confusing. The purple lines, though, are kind of the current straddle. So I think, what did I say it was? Let me look, about 30 points right now. Yep, 31 points actually. And if we were to open right where we are, oh, I think that thinks it's SPX. Let's try this and see if it works. Yeah. So this is kind of the range it's pricing in right now. So the purple line, Victoria, top and bottom is essentially showing you what the straddle expected move is from an options pricing standpoint. So if we were to open right now at 72.55, it's saying this is kind of the upper bound of that range. Doesn't mean that we could stop there just because it's there, but it's an approximation of like what is the market kind of pricing in given where we are right now. Toxics. I can't guess that name. But you know what? Here's what I'll say. I am not going to judge anybody that trades ICT. Like, I listen to Christian, and the funny thing about it is if I didn't listen to what he called something and just looked at what he was putting on his chart from like a structural price action standpoint and how he's like using it to define his risk for entries and why he's targeting a certain range or a take profit area versus somebody else, there's really nothing wrong with it. I think where ICT gets a bad rap is because the guy who created it is an absolute nut job. Number one, that's not debatable, right? If you've seen anything of the guy, he's insane. But I think the terminology is what turns some people off. But who am I to judge? I mean, I'm talking about gamma. It's a quantifiable thing, Black-Scholes method for options, but if I started saying theta, vana, vega, zama, vama, and named all these Greeks, and I was saying that while I was drawing things on a chart, a lot of people would be confused and be like, that's dumb. And I think that's where ICT kind of gets a bad rap. So I don't want to judge that harshly. I think if it works for you and it gives you a framework to execute and manage your risk and have a trade plan and positive outcomes for your P&L, then by all means use it. You know what I mean? So I agree with that. Like I said, if it wasn't for the terminology, I don't think people would care. But if you've had exposure to other methods or trading price action or, certain terminology or verbiage, then you're more likely to, I think, come at ICT with a negative slant. But there's going to be a lot of people here who found us because they're trading futures or they're trading options or whatever that use ICT that maybe want to learn something else for Confluence. So I don't want to turn anybody away if they're using something that works for them, right? It's just all a way to make money out of the market. So whatever works for you. But I do find the personality of the guy to be kind of, abhorrent. So that's just me. Anyway, guys, if you're just joining, I see we've got some more people trickling in here. Good morning. My name is Mitch. If you're new, this is the Rake Trades Network. It's called Project 365. We're going to try to grow this channel and this community one day at a time, every day for 365 days and hopefully beyond. But if you are here with us this morning, my name is Mitch. I am kind of the resident gamma geek. I leverage the knowledge of market maker positioning in SPX and how they hedge those positions with ES futures to kind of draw my market plan each day and consider the zero date structure to kind of give myself really great measured risk to reward opportunities, capturing X amount of points, where are the strikes and areas I want to target on the day, what behaviors am I looking for in those areas to kind of give me a higher probability of potential outcomes. So that's what we're going to go over on a lot of my streams is that. And then also while I'm here, it is the pre-market. Obviously this overnight action has been mostly a grind to nowhere. So if you guys do have questions, whether it's about what I do specifically or about the market in general, things you are struggling with, something you want some guidance on or another set of eyes on, please ask. This is a little bit of a slower time in the market, at least today. So please feel free to get those questions out, guys. But from my framework, again, we're kind of stuck in this middle of nowhere area. As it relates to yesterday, we're kind of dead in the upper third of that range, I would say. And the key strike today, just like yesterday, is right on that 75-80 kind of area. So really interested to see how that shakes out and what we get from that. I'm actually going to make one modification here. Hopefully this makes it a little bit cleaner. There we go. What's the charting pack used? This is just, are you talking about like the indicator that's showing these red and green bars? Toxic? You got to give me a hint on how you want me to say your name because I'm just going to butcher that. I'm just going to call you Toxic in the meantime because otherwise I'm going to feel dyslexic. If you're talking about what's on my chart, this indicator, yeah, it's just, this is a custom thing I made with Claude where I'm pulling data from the vendor that I use and just mapping it onto my chart instead of having to look at their dashboard. Because in my experience, once I have the pre-market positioning laid out in front of me, I ascribe a lot of value to the pre-market positioning as far as being of the most influence, because if they were entered yesterday or before, generally speaking, those positions are held all day long, or the most important ones anyway, and kind of give you the best framework as far as the structure coming in. So hopefully that makes sense to you guys. Obviously things can really change certain days. Like we covered earlier, if you guys joined late, we looked at yesterday's price action and kind of how after the London close, what looked like a really risky spot below us yesterday, like at yesterday's low, had we gotten much deeper, like had we gotten under 71.90, then yes, there was obviously risk on the day. But had we just looked at the pre-market profile, you'd have thought that we only had two strikes that were supportive at 72.05 and 7200. That ended up not being the case. Once London closed, actually kind of in here, this 10, pretty much right here, this whole range from like 20 to 15 on down to 7200 became pretty supportive, which is why I think we never actually meaningfully got back below 15 the whole rest of the afternoon. That became the floor. That was the hard support on the day. So I do think that kind of intraday changes to the positions can obviously make a difference, but if you just looked at the pre-market profile yesterday, you kind of came to the exact same conclusion. Hayden, do I trade gold? I mean, I trade at just about NQ and ES mostly, and then obviously SPX pretty heavily. I stick to kind of those things mainly because like with ES and SPX, the idea here and leveraging what I see is that because SPX is like the most liquid trading vehicle in the world, and it has such huge volumes, and the amount of futures being traded that correlate with the SPX options positions is such a definable edge for me. I don't tend to look elsewhere. The most that I'll do is I will take like an NQ or an MNQ trade, where like if I'm in an existing position and I really wanted to take a long, even though I'm holding some runners short, I will take the opposite. So for instance, yesterday, when I caught this short from 72.60 and I ended up getting my full exit down here at 72.05, normally on a day like that, what I would have done is I would have actually taken an NQ or an MNQ long, because that's an area, had I not been in the short on ES, I would have been longing ES from there, right? So that's kind of, I'll trade both that way so I can express both sides of my plan. Sometimes I'll double up and we'll catch both names in the same direction if I feel like I have really strong confidence or confluence on both charts. But that's what I do. So I don't tend to stray very often because I don't really pay attention to anything but the 0-date positioning, which allows me to trade this thing that I am able to understand that much better, right? I don't have to sit there and scan for an options name or an individual name that I think looks good. I don't have to do multi-time frame analysis very often because I am only concerned about today. What is the range based on the positions? What do I know from my edge in this system? And that provides me plenty of trading opportunities. I literally don't need to go anywhere else. I can trade SPX option strategies. I can trade futures on ES or MES. I can trade NQ off of this. Because this, broadly speaking, the S&P dictates most of the market outcomes, right? Obviously, tech is strong right now off the back of the Mag 7 earnings. You've got some other stuff going on. But the broader health of the market is generally represented in what the ES is doing in SPX. And because they're so tightly entwined, I just don't feel the need to go elsewhere. So hopefully that answers your question. But no, I don't really trade gold. Sorry. Anjan Ramesh, what is the win rate for this strategy? I don't know that I don't have TradeZella anymore, but I'll have to look at a dashboard for you. But basically, it's pretty high. Because most of the times the risk is so defined for me by like 5 points, rarely 10-point stops, that it's really easy to get out of something break even or in small profit no matter what. And then when you're trading, what I like to do is if I'm in something directional, I will hedge that with an SPX option trade of some kind. So like I like to play butterflies if I'm confident that like we're going to pin in a certain range. So if I'm essentially saying, I think we finish near, let's just say it today. If I said, this is not my plan, by the way, 72.30 ES is about where I think we finish. If we fail to go higher, we come back down to a balance. And I think this is it. I can say I'm going to enter a 10 strike wide butterfly, or 10 point wide butterfly. So I get paid if we finish inside of 72.40 to 72.30 or 72.10 to 72.20 to 72.30. So I've given myself a 20 point range that I get paid on from options if we settle as close as possible to 72.30. So I will take something like that might be counter to me like wanting to go long on the day for ES or for futures. And I can trade directionally all day long and then also potentially get paid on time, just on the passage of time, if we finish in that range. So I have the edge of direction, and then I have the edge of probability of the range, right? And where we finish. So that's how I trade it. So from an outright win percentage, I think mine is probably hovering around like 70 between options and futures. Would I use these levels as targets or important pivots? Yes, Toxic. Basically, that's like when I look at these ranges, what I'm looking for is like it's a test until it's not. Like it's resistance until it isn't. So what I'm looking for is like, how do we react to this level here at 72.75 today? My expectation is that it's a rejection, right? But if we push through it or into it, what I know about that type of position is that it will accelerate. So if we are strong, if the bid is strong, I'm expecting at least 10 points because it should kind of fly us up to this next strike. So the same reason why yesterday we fell so quickly from like 45 all the way down here is because this whole range yesterday was nothing but a bunch of these red dealer positions. So what they do is they accelerate the momentum, whatever the direction is. So the same reason we can bounce really violently some days. Like I know you guys can probably think of days where we have sold through like a 20 point, 30 point range. But when we bounce so viciously back up the other way. It's for the same reason we sold through it. The market makers in this range are actively helping price move wherever the momentum is going. They have to basically chase, right? But when we get into these green zones, we know the opposite is true. They are taking the opposite direction of whatever the momentum is at that time. Unless the flow of the market is so strong, it overwhelms that reaction. Or the size of those positions are so small, they don't really impact things, right? Because market makers don't dictate shit, guys. That is a really common misconception. And it's why I get annoyed when I hear people talk about like the infamous market makers are trying to screw me. They know where my stop is. They don't care about you. They react based on what they are holding. So they dictate outcomes in some cases because of the size of the flow based on their reaction, right? But they aren't moving the market in the sense of caring what direction it goes. They only care about what do I do when price gets to where I'm at, right? That's it. There is no other thing they're worried about. Is my entry model similar to Jake's when I get to those pivot areas? Honestly, it depends. I have more conviction when I see things like yesterday where you have like a bigger couple of strikes in a row. And I'm willing to like take a first stab if I'm confident that like we're not going to really get through that without something happening. Like yesterday, we had that volatility kind of ramp up a little bit there. My initial reaction as we got lower was, I don't know that we get the extension deeper because volatility didn't look like it was going to keep ramping up. But then we got that little extra selling pressure, that extra push. I got out, I hit my target on the short, And I hesitated on going long because I just said, you know what, I've caught enough today. I caught 30 points up almost. I think it was 20. I got my last trim off at 75. So I got a trim at 20 points and 25 points. And then I got stopped on my last runner. And when I got stopped is when I actually looked at the counter short. So I think all in yesterday, I caught almost 100 points on ES in total. 60, 70, yeah, so just over 100 points actually on 2 trades. I didn't need to take anything else. But as far as an entry model, I definitely yesterday would have been like, had I not been short, I would have longed a first strike or a first touch into that zone, where I think most people are going to look for like the formal, how am I measuring my risk on the candle, right? Like based on that reaction to the level. And there's times where I do that. I like want to see how price behaves in an area instead of just taking the first touch. It kind of varies based on the conditions. Okay, so hopefully that answers your question. If it doesn't, please let me know, but slightly synchronic. That is my rationale. There are times where I'm taking like a failed sell or a failed buy or a failure to go higher, a failure to go lower. Those are all things that I consider, yes. Okay, let me catch up here, guys. If you're just joining, I see we kind of get the viewer count is oscillating a little bit. So if you're here, my name is Mitch. I am kind of the gamma geek here with the Rake Trades Network and Project 365. Trying to kind of go over a little bit of the pre-market structure for SPX today and what the market makers are doing with their positions. Keyword today is thin. Not a lot of strong positioning on the board. So I've kind of drawn some zones out where I will be watching for reactions. The biggest one it looks like we're coming up on maybe at the open is going to be if we test up near the 72.75. So that'll be a big test on the day to see if we can kind of get into some new all-time highs a little bit up the ladder. So Luke, good morning. Good morning. Is what we see on my chart way different information to an order book or depth chart? I would say there's probably some differences just in the sense that this is just options positioning. So if you're looking at like an order book or the DOM or book map, for example, what I would expect to see is like if there's X amount of contracts held, you can technically on some of the data platforms that are showing this information, right? You can see what the expected hedge product to trade is, meaning how many ES minis would need to be bought or sold, like net, if we approach that strike. So for like 72.75, for example, I don't know if I can pull that up quite yet, but if I looked at like right now, I can't look at right now, but let's say 6:30, 2 hours from now, 7:30 Central, and we were sitting at 72.75, right? There would be an expectation that every like $1 or $2 move around that price, market makers would be selling 300 minis or more if we got there. So I think that is something that we would want to obviously pay attention to if we got up there. So hopefully that kind of answers your question. You can correlate those things to say this is how many of something that should be trading based off of what I'm looking at. So hopefully that answers that question. KYI, sorry, no giveaway has started yet. We will do one this morning. We'll give away a 50K account. Just going to let us get kind of more into the day here. Probably do that a little closer to the hour and a half mark of my session. So I want to say probably in about an hour. But yeah, we will definitely do that giveaway, and that'll be the way we do it. So stay tuned for when we get that going. Gator, good morning. Thank you for joining. Familiar name. Victoria asked, do you stay in a trade if data is going to drop, or do you wait until after data drops? If I am in one, I'm in it until I'm not. So I don't really worry too much about it. If anything, what I will look at is kind of where, and this goes for like FOMC and different days, what you can actually look at is, if you look at the structure of the profile, what you can find is that there are kind of tells, depending on what the data is, where like, I'm going to get too in the weeds here for some of you new folks, but the idea of charm is a thing, right? So charm is like the passage of time. So when you guys think about theta on an options contract, and how that decays and how that can kind of screw you a little bit on your positions, right? Is charm is functioning largely the same way. So what is kind of the background flow? If there was like a current in the market and it was passively buying or passively selling relative to where we are, charm can also be leveraged as kind of your loose proxy for like, if we're not over this price, we're probably going to go this direction or to this price. So when there's data prints, sometimes you get a hint of, well, where am I relative to that? So let's say the initial reaction is poor and we had a bunch of negative positions here. Well, where's kind of like the strongest balance or stopping point nearby? You'd probably say like 72.30, right? Or you could say, well, the strongest one is 71.80 down here. So if we got like a really nasty reaction and we didn't stop at 30, I'd be probably looking down here for like the balance spot, right? So you can kind of use some of these positions in these ranges to say, ooh, we got a really positive pop. Where could we go from here? And that's what you do. So I do think, just looking at pre-market so far, guys, I do just want to say good morning, Virginia, also. I have this gut feeling we've made our way up here already from the overnight, and the open was at like 30. So it's been about 25 points, right? Decent overnight push up. It's hard for me to say that we're not going to hold up here and then maybe try to get this test into the open of this kind of key strike for higher. If we sell from here because we have data shortly after the open, or maybe some stuff is popping off here that gives us a little window of weakness, you know, just for kicks, I've got an eval. We'll sell, and we'll just say, I don't think we're going to break over this kind of resistance until into the market open. So maybe we come back to test through the bottom of this range in the pre-market and just kind of get back closer to the overnight open. Maybe that's what we get. I don't know. But this is how I would normally like take a trade and define my risk, is like, it's got to prove its strength over this resistance, right? Do I think this is a strong resistance? No. I think this is kind of the bigger test up here at 75, but just as far as like you guys, like how I visualize it, right? That's what I would consider doing more often than not. Hellboy, can you qualify that question for me? When, as far as momentum goes, are you talking about like these ranges, or like the momentum of like negative gamma, or what specifically? Sorry, Tuculus, I'm not trying to bore you, but this is kind of the geek stuff here. If you've got a question about it, you can certainly ask me. I'm not trying to put anybody to sleep, but unless you're talking about the music or something, I don't know. How PA moves through the zones. So price action through the zones, yep. So again, the idea here is that if a market maker is hedged short because they're holding a net short position, they basically have to move with the momentum. So they accelerate moves both directions. So if we're going to sell through this range and we got some decent selling pressure and we moved into these strikes, the idea is the market makers are selling futures as that position gets more negative, right? They have to hedge it the same direction it's moving. So let's say you got down here and you bounced off 72.30 and you got some really strong bids back up into this same zone. They are now buying futures as we move through this zone right here. And I want to make sure when I'm actually pointing my mouse at the screen, can you guys see kind of where I'm talking about when I'm moving through this little range? I just want to confirm Somebody the other day told me they couldn't see my cursor, so I want to make sure that I'm... Maybe this is better. There we go. Now you got a hand. Maybe that's a little bit better. More obvious anyway. Okay, great. So that is how I would explain that. Is the really simple way of thinking about it is if they're green, that means the dealer is long the position, which means they sell into strength, they buy into weakness. So like if the longs are below you, they are buying to buffer that. If they are above you, they are selling that resistance, right? So it's a really simple way of looking at that, obviously, but oh shit, I entered 2 contracts, guys. I'm gonna just hold one. That was kind of goofy. Don't need to be going heavy. You know it's an eval, but you know, I'm not trying to go for broke on a uneventful pre-market. So can you tell us about your road to profitability with emphasis on the non-strategic part of the edge? Non-strategic part. Well, so more of like the psychology mentality part of it. So I think I touched on this at the weekend. So if you guys weren't on that kind of education stream, whatever you want to call it, what I would say is I was kind of floundering around the web. I had joined a few different discords. I didn't really know how to trade. I was just so used to like being in a group or following an account that signaled things. And the why of signaling that trade, why that strike on the option, you know, futures weren't really as prevalent at the time. Prop firms, I don't think for me anyway, were anything that I was exposed to at the time. Had I been, I think it would have been a lot easier of a journey to get started, just because it's like price action rules everything. Options, you have so much more to consider, but a lot of signal chasing, a lot of, you know, just wasting money. Whatever gains I made on a winning trade, I oversized on the next one and gave it away, and doubled down on the following trade and I would win. And then, you know, just that vicious cycle, right? I'm sure that's familiar for a lot of people, whether that's current or former, whatever the case may be. And then I found Jake's Discord. Hadn't taken the mastermind, but I really dove in deep on all of his trade reviews. I just watched them religiously and was like looking for pattern recognition. I was like, okay, all of this is there for me, literally documenting every trade, win, lose, or draw, right? Every single thing was there. And the big takeaway was that sizing was consistent. The strategy was pretty much the same as far as entries and exits. Overwhelmingly, right? Like pretty much the same thesis made itself evident, whether he was long or short, at a level, near a level, looking for a certain reaction. And that just resonated with me. And I really just like challenged myself to say, like, can I find that on my own? So I just started looking at charts and I started looking at levels that I would draw. They weren't necessarily his. And then if I got close to one of his levels, I was like, oh, I think I'm on the right track. And, oh, look at what this would have netted me out. And then I just started taking trades off of it. Wasn't even taking his signals, wasn't even necessarily paying attention to his live streams all the time. But the framework of what he was doing was starting to like become ingrained in me because I just watched so many of his recorded trade reviews and things. And what it really ingrained in me was that if you aren't managing the risk, you are just doomed to fail. And I really looked at everything I had done up to that point through that lens. I looked back at all of my best trades and then why I ended up giving money away on a losing trade. And more often than not, it was because I was like sizing one way here, sizing another way over here. If I won, but I was sized down, I was mad that I was sized down. So the next time I sized too heavy. And then if I took a loser, I said, well, it's because you were too heavy. And it was that vicious cycle. Like I was still doing those things. So I think even in the mastermind, there's a section in there, without giving any sauce away, where the discussion is around that brutal cycle of like, what level of a trader are you? Are you in the consistently inconsistent phase? Are you in the consistent but not super profitable phase, but you're starting to follow the process? Or are you now in the consistent in process, consistent in profit? You're on the uptick of that Nike swoosh, the check mark effect, right? And when I took the mastermind program, it just solidified all that for me. And I think I mentioned this too on the weekend stream, is that trading is very much going to hold up a mirror to you about who you are, and like all of your weaknesses, the things that you are good at, the things you are poor at, your emotions, all the ugly things are there. Like, you can't hide from who you are when you're trading. And if you don't address those things, they will show up in your trading outcomes. So I think that that was a big thing for me, and that was what was transformational for me. So that the non-strategic part of like using the dealer positions and this, that, and the other, I would say that is the edge, is like knowing myself, knowing what would make me emotional, being antsy to take a trade, not waiting for what I had a plan for. Those are things I essentially don't allow myself to do anymore. I will not enter unless I have something that I already was anticipating and specifically looking for in order to do it. So hopefully that helps or clears up, what it is you were looking for from me anyway. If not, please let me know and I can go on. I don't want to bore everybody to death, but Miggy, good morning. Thanks for joining. All right, guys. Well, obviously I'm in this little kind of tentative short trade. I'm not in love with it. I think we do have the potential, just given this kind of range we've been in. We got the stab higher that went nowhere, but I don't think we're really at risk of going too deep. I think it's likely that we kind of stick closer to where we want to test up into yesterday. But again, we've still got another couple hours before market opens. So where we go from here is really kind of anybody's ball game. But as far as my plan on the day, I am really kind of solely focused on, do we get a test up here at 72.75, and do we kind of get that extension into this upper range? I think if you guys are just joining, what we've already covered about today's overall positions is that they are small. We are talking like a couple hundred contracts here or there. So generally when I see positioning like this, where these are so thin, but you've got big size on the far extreme ends that are like way out of what we're going to move to today. I mean, just look at that. This is literally over 100 points away. We're not moving 100 points today unless something like crazy positive happens, I would think, right? So with that, my expectations are more about what are the biggest positions kind of closer to us and where might we open on the day. So I would say my expectations are, if we test 72.75, maybe we can get a move up towards 7,300 today, right? But if we test it and reject, where might we come back to? And I think the bottom of that range is this very small little balance area around 72.30. And if you get a rejection that sends you down there, because this is so thin positionally in these ranges, we saw what could happen yesterday with just a little bit of volatility. And I think volatility is considered like really low right now. The market has kind of like priced itself out of any real concern for risk. And I think that's reflected in the positioning. No one's really like covering their ass to the downside. No one's really buying protection. And if they are, they're doing it like way out of the money. So they're not looking for short-term pullback protection. They're looking for like an oh shit moment kind of protection. So given that information, I'm not really interested in shorting. I'm interested in like my upside potential because I think that's where the majority of the bets are being placed. They expect us to go up. So I am not I'm not really too concerned with downside. I'm just looking for like if we did get a little volatility and I see it picking up a little bit, where would I be looking to like take a trim if I did short? Or where would I be looking to say, I don't think we go much lower than this unless volatility keeps ramping, you know? And even then, like where would the natural stopping point be? So today I think we've already identified like some of these smaller ranges that we might be able to trade in. I think just looking at the overnight range, again, we kind of opened at this, what was the overnight open? We'll just draw the line here quick. Right, that's about it, or close enough to it. So we have like a pretty good 30-point range to trade back down into. And again, that's pretty much right where this little tiny balance spot is, right? So if we zoom way in, maybe that looks a little bit better, but hopefully this makes sense, like why I'm drawing these ranges the way that I am for you guys, okay? So again, I think we hover around up here. I think we at least get a test of 72.75. And if we reject it, obviously we could come all the way back down. But I have this feeling that if we get up here and we move through it, we're probably going to go test higher. And from a gamma perspective, if you guys are here for that, right? The idea, the same thing as these like positions where if we see some green bars in a row, we kind of expect things to slow down there. We expect things to maybe reject or grind a little bit. The gamma idea behind that, the rate of change of delta as price moves, is all that means, is that it doesn't really get super strong until you get much higher. So normally as we moved into this like long position, you'd be saying, oh, that's probably the ceiling on the day. If you get a strong enough bid, there is technically like room to move way up. But I think it's healthy to like constrain your expectations a little bit. I'd rather be surprised and have a plan for the surprise and say, I'm happy from here to here and anything else is a bonus. I'm not going into the day thinking that we're getting to 73.30, right? I'm trying to frame my mind around expectancy of outcomes and probability. If we get over 72.75, then I'm looking for 72.90. If we get through 72.90, I'm looking for a test of 7300. If we get through that, anything else is a bonus. If we get to that, I'm happy. Because depending on where I enter and where I define my risk, I might be happy with 72.75. But I'm using this if-then framework to kind of understand how I'm developing my plan for the day. If we get the opening print and we're down here, I'm looking for a test at 72.30 to trade back up into the overnight high. If we're holding the overnight high, I'm looking for a test of 72.75 to 72.90, right? If then. So if we fail 72.75, I'm looking for us to hold 72.55. If not, I'm looking for a failure down to 72.30. If, then, unless. So same thing for yesterday. Yesterday I had a plan. If we're holding this strike, I'm looking for a long up to 72.75, 72.80. If 72.80 breaks, I'm looking for 73.05, right? Like that was my if then. If we fail to hold the top of this range, I'm looking for shorts through the bottom of this range, down to the bottom at 72.40, down to 72.05, which was our strongest support. We got that yesterday. If, then, unless. If this happens, then I'm looking for this. Unless this happens, which means I'm now looking for the next if then. So today, that is the whole thing. If we hold 72.55, then I'm looking for a test up to 72.75. If this, then that statements. Yeah, I mean, that is, somebody earlier asked me about like, you know, the non-strategic part of the edge. I mean, I think technically that is a strategy, like using that framework, if, then, unless, that deterministic kind of thing. It takes all of the guessing out of it. If this happens, then I would expect this to happen, unless, right? So not to give anything away, but like from a price action standpoint, if you break the previous bar's low, in your mind, you're probably thinking that, well, the next candle should also go low. If it doesn't, I'm going to take that on board as a sign that it failed to go lower when it looks like it should have from a probability standpoint. Maybe I can look for a long here on a reversal, right? Obviously, there's more to it than that, but even in the simplest form, you're already doing that when you're watching like bar by bar, right? If it breaks above the previous candle's high and closes there, then I'm expecting an extension higher. Unless it fails to close over the previous bar's high, now I'm looking for a potential failure to go higher, and I'm looking for a reversal. Okay? I mean, big in the sense is 5 points, right? I'm not getting too horny for that, Eric, but yeah, I mean, it's something. So, and maybe I should have stayed in the 2 minis instead of getting down to the 1, but I'm not trying to like be a bad example here. I took a bunch of trades on the Friday stream when I covered for Christian, and honestly, guys, like, I could have made an easy like $1,500 on those trades, and I let them go to break even because I was trying to hold to a target inside the last 30 minutes of the day, kind of like a jackass, and put a couple other ones on just to have something on during the stream. So normally when I am trading myself, I am very rigid. This is not a trade I would normally take, especially not the pre-market on very thin positioning. For all I know, this just whipsaws back up the other way and we get the 72.75 test before market open. When the profile looks like this and you are talking about there are contracts literally in like the couple of hundreds in between like very small 1,000 contract lots, that is not like I'm not excited about this position. Days like today means the market is going to decide what it's going to do. The market maker responses today are going to be pretty muted because volatility is kind of low. Like, obviously we're not down in the 16s. We're kind of back over because I think volatility is just too cheap technically for the things that are still lurking out there. But even then, I think that the influence of these market maker positions, because they're so small, are not going to be huge, right? They're not trading thousands of minis because they're holding big positions. They're literally trading like a couple hundred minis at best. So my expectations are super, super, super low. I think today is a day where if you're over 72, if you're holding over 72.50 into the afternoon, I think you've got an outside shot at the upper end of this range. So for me today, I think I would be saying like best case scenario for longs, if we're holding over 72.50 into the afternoon, is like a potential move to the top of this range. Anything over 7,300 would be like big time bonus area. I'd probably feel a little safer looking like maybe 72.90. Like this little balance right here would be a good upside target for me. So that's why I'm saying I don't really have conviction that we kind of give this area up with too much of time before the market opens. But if we do drop lower, I think the potential to sell gets really interesting because of these ranges. Because it's thin, because you don't have a really strong positional balance where market makers are supporting the market, they're not like buying the dips in size. So if you get some selling pressure, if you get a little volatility spike like yesterday, you get a bad headline, you get some news, whatever might happen, the potential to drop very far and very quickly is certainly there. Because one thing we touched on earlier is like, why do things move through these zones when they're a lot of like red, right? When the market makers are short these positions, when you see the red bars, they're helping the momentum, right? So it stands to reason that if there is less of something in general, it's kind of like negative gamma. When there's thin or very few positions, it's like, you know, it's just air, it's dead space. If I dropped a bowling ball through here, it would fall really quickly. If I rolled it down the hill. That is something that I actually like to tell people if they're struggling to get this concept, is like, if you had a, I'm just going to get rid of my drawings here a second. So maybe this will make more sense. If I had a, and we'll look at yesterday's positions instead because they were just bigger, right? So if I was a guy and I'm like pushing a mountain or pushing a boulder up a hill, right? And this is like the top of the mountain. And then there's a little valley. Like, we're just going to draw. So bear with me, guys. I know this is probably like really stupid looking to you. But if I was trying to push something and it's flat, I'm not really picking up momentum, right? I'm going slow, I'm going steady, I'm not moving very quickly. But when I get to the edge of the mountain and I push that boulder off the edge, what happens? Picks up a lot of speed, picks up a lot of momentum. It's got to get to the next mountain peak where it slows down a little bit, and then it can accelerate really quickly. And then it gets to another really big peak. And if I stall out here, what direction am I going to go? The boulder's going to roll back down the mountain to the next peak and then maybe back up here, right? So that's how I kind of consider this, is like if I'm pushing that boulder up the mountain and I get to a peak or a flat spot, I'm either going to crest the peak and I'm going to plateau, I'm going to go slow and steady, I'm going to grind, I'm going to chop. But if I fall off the edge of the cliff, that boulder is going to pick up some speed. So where do I have the chance to pick up speed? It's either in these red zones, right? Or where there's nothing there at all. So if I look at this same positioning, but I look at yesterday's price, maybe that kind of idea of the boulder will make sense, right? We pushed the boulder up this kind of grindy chop, but when we failed to get on the other side of this mountain, what happened to the momentum? We came back, and when we got to the bottom of this zone right here, we fell through that space. We fell through this empty range right here, right? And then we couldn't get over this mountaintop. So then we rolled back through the valley until we hit the mountaintop. We couldn't clear that one. We came back. We couldn't clear this one. We rolled back. It's that, I don't know if that's going to make it more obvious to you guys from like a visual perspective about how to think of this stuff. But the idea of dealers being long and buying dips, right? Accelerating momentum, selling the rips, which then accelerates the momentum back down, right? Why are we moving the way we're moving? We couldn't clear the mountaintop. We fell through the range. We couldn't get over this mountaintop. We rolled back through the range and picked up momentum. So maybe that's another way you can think of it. That makes sense to me. Once I started thinking in simple terms that way, it helped me kind of digest these structures and understand where are my opportunities. So if you guys have been struggling to understand the concept, maybe that's one way that you can kind of simplify it for yourselves, right? But yeah, so far this is a decent trade, you know, a couple $100. If I was, again, looking at today's positioning and I was looking for a target, we can even turn Rake's levels on and kind of see where his levels are versus the positioning. Look at that. His levels are actually bracketing the kind of little supportive area that I would be looking to target to take a trim on this short. So this can, that idea of confluence of like whatever your system is that you're using, same thing, right? We got this little balance up here selling against us that we couldn't break through. Also a level right there bracketing that zone. We've got a level at 72.75, which is where our biggest test of the day sits currently. All right, we've got another level up here directly under the kind of the bigger upside ceiling on the day, let's call it. So there are ways to kind of use this as confluence to say, like, why did one level get a reaction where another one didn't, right? Or this level held on the first touch, but this level over here, it went right through. This gives you a little extra color as to like why those things happen sometimes. Does that make sense? We'll tighten this one up. Again, we're still a decent ways out from the pre-market open, or from the market open. Where we go from here, we'll have to see. I don't know what time those data prints are. If anybody's looking, see what we got. Let's see. I think I have a calendar somewhere. Let's look and see. I think Eastern time. So PMI at 8:45. New home sales, Jolt, job openings, and then manufacturing PMI all at 9 o'clock. So everything after market open. So again, my gut tells me we kind of, if I was going to guess as to what happens looking at these positions, I would say more than likely, I think we just kind of keep doing this stuff. I think we do this, and then we get that kind of test into the open. Do we break up from there, or do we reject back down to this range, right? We either break from here, kind of thing, find a balance, get stuck up in here, finish this way into the end of the day. I mean, there's a couple of potentials, but like, I think we'll kind of range in here pretty tightly into the open. The odds of us like selling off, I think, would have to depend on a headline or something else going on. But yeah. Anyway, if you guys are kind of joining late, I see we've got a few more viewers that are here. Thank you so much for tuning in. My name is Mitch. I am the resident Gamma guy from the Rake Trades group. We've got Christian, who's an ICT trader that covers the Power Hour. We've got Ron G and Jake that cover, obviously Jake's in the New York Open, and Ron is the Asia session covering kind of the standard market mastermind program that Jake teaches in the Discord. You've got Alan, who is also a former mastermind student like myself, who trades the same price action techniques and I think some EMA based strategies. So we've got a little bit of something for everybody. My whole thing is looking at SPX market maker positioning and how that influences ES futures trades based on how they hedge, and kind of what the expectations are for like a structure on the day coming in. And I'm just going to do a quick peek and see if anything has shifted too much pre-market here. Doesn't look like anything has really radically changed. Like I said, guys, if you're just tuning in, the big tell on the day for me so far right now, things are empty, 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 empty. The fact that we only have a couple of strikes that are 1,000 contracts or more tells me that people really aren't placing too many bets, meaning there's no conviction in where we're going, except for kind of on the edges. So they are either thinking we really drop like a rock, but we don't go any further. That's why there's a big spread down here, down by like 100 points away. Or you've got people thinking we can rip face and set a new all-time high, but we're probably not going any higher than 100 points to the upside. And in between those two places, you have some pit stops, right? Obviously, to start the day, we're a lot closer up here to yesterday's high than we are going much lower. So where you think we're going to go on the day, I think it's easier to assume we're going to test higher, at least initially. What happens beyond that, we will have to see. But I think today is a day where the market is largely going to dictate where it wants to go. Yeah, if you guys want to support the channel, please like and subscribe. Like through the thumbs up icon over there. See if we can get some support for the channel. I'm only doing Tuesday, Thursdays right now for the pre-market. I would say if you guys follow me on Instagram or you've seen anything shared in the Discord, you'll know that most of these pre-market plans tend to kind of hit both directions in most cases. So if you guys can support that way, please do so. And we will give a 50K account away this morning before my stream is over. If you stay tuned, and we'll give you details on how to enter that giveaway. That will be a 50K account. Let's see who that is going to be through today. Let's see. I believe this one is going to be a 50K, either alpha or lucid. Let's see what we've got here. Yep, lucid 50K flex account is going to be the giveaway today, so stay tuned for that one. Hey, good morning, Never Suffer. Thank you for joining. Liz, drop a deuce. Oh, that's hilarious. No, I think most of my mornings, honestly, are pretty much just what I'm doing. I come here, I look at the positions, I get a feel for what pre-market's done as far as the overnight action, how much of that range have we covered, you know, where does like the pre-market high line up with some of these positions on the board? Did we get some kind of like explosive range or not? What is the straddle priced at coming into the day? But as far as routine goes, I'm pretty much looking at the basics. I'm looking at the structure. I'm looking at volatility. I'm seeing what else is out there for news or potential headlines. You know, I would say that I do pay attention to a lot of the macro environment. So there are some headline risks kind of looming large out there that I don't know that everybody is really pricing in effectively. Whether that's the Iran conflict picking back up, oil pricing and energy. You've got stuff like the yen carry is the USD JPY is actually going up a little bit. You've got gold moving up. You've got yields moving up. The 10 and 30 year are both kind of shockingly high right now, which tends to be a drag on equities. So there are things to look at, but I don't let that color what I look at very often. Most of what I'm concerned with is what are the ranges that I've got for myself on the day based on these positions. So if you're just joining, I will give you kind of my ranges here. 73.05 to 75 or 70. We'll say 70 down to 30. And then the riskier part of the day is anything under 72.30 to 180. So you've got kind of these zones we can traverse pretty quickly. And what are my expectations when we get to them, right? Any selling through these thin positions and below 72.30, I would expect volatility to really start picking up. I think if you are not over 72.50 through the morning London close period, I think it's easier to assume downside finishing and maybe exploration than it is upside. I think if you are not at least over 50.55 post London close, the odds of moving higher are significantly reduced. Obviously, the caveat there is these positions are not big. That kind of passive pressure I don't think will be that strong, but generally speaking, I think that's a pretty safe assumption. Rory, thanks for joining. We are doing well. Thank you, Liz. I appreciate you saying so. Yeah, guys, if you have questions, please ask them. This is your time, right? I'm going to do what I'm going to do regardless. So if you guys are here and you're watching, I'm happy to have you here, but I want to make sure I'm engaged. If you guys have questions, something you're looking at, let me know. Somebody did ask for NQ. Obviously, we've gotten a decent move out of NQ overnight, which I'm thinking with regards to ES, a 10-point move on ES is like a 40-point move, or what is it? Let's see. So we've moved about 30 points overnight on ES, and it looks like we moved about 200 points on NQ. So a much different move as far as points that you could capture. So I guess 15 points on ES is 100 points on NQ, or they just diverged that much from one another. But if we look at like the rake levels here, We'll go to like a 15-minute chart. It's probably a better capture of what's happening there. Obviously, NQ much stronger, coming back to test a level. I think if you looked at yesterday's price action and what Jake was looking for was kind of a similar situation, was testing a level and potentially going long off of it. It worked for a bit, but that same failure that we got in ES yesterday happened with NQ. So for today, I think if you're bullish, you would be looking for kind of some holds of these levels, testing of the overnight high, and then making some new highs. So yeah, I think today, again, my base case is a test higher first, but the risk on the day is likely lower, which goes without saying. The risk is always to the downside. I think the assumption is, regardless of index, for me, again, I think 72.75 is like the biggest test on the day that we would be looking for. So my base case, again, that I mentioned just a little bit ago, is I think we stick in this range into the open, and we go get that test, and what happens when we get there dictates kind of the rest of the day's action to me. So you could be asking, well, why aren't you longing right now in the pre-market? I'm treating this like kind of the test that it is, right? Like if we've been fighting this all morning, we got one test higher and couldn't break this little top of the range I had drawn, then I'm assuming that I can short it potentially back down to the bottom of this range on any like extended selling pressure. Do I believe in it that much? No, and that's why my stop keeps getting moved lower. I just have this feeling we break back higher. Sorry, Swift Trade, I'm not sure EXC if that's a question or something I should know. Anyway, guys, if you are just joining again, my name is Mitch. Thank you for being here. We've probably got about an hour until Jake is going to start his stream. So if you're tuning in early looking to see him, you're going to have to wait a little bit longer, but he will be on before too long. In the meantime, you've probably got about another 45 minutes to an hour of me, best case scenario. So if you guys have questions, what you're looking at pre-market, you would like me to check out for you, I'm happy to do that. While I primarily trade SPX and ES, I am no stranger to price action and the mastermind program for entries and exits and trend analysis, so we can look at just about anything that you would like. But as far as my plan for the day, I've got these little ranges drawn out here that kind of identify where I would be looking to see price develop and look for some reactions. Oh God. I'm not even going to guess what's going on. The old TradingView magnet giving me some problems. But this is pretty much my plan for the day. I am watching for potential test at 72.75 that either rejects to come back down to the 72.30 area or a break above that to test the height of that range at 7300, 7305 or so. Anything beyond that, I would consider bonus territory. I do kind of feel like 7250 is really essentially going to be like our line in the sand, right? The reason why I think that is you have the potential to just get like a steady drift higher if we're not testing this range down below us. On the idea of charm that we discussed this morning, if you're not under 7250, where you might get sold down to find a stronger balance lower, the odds of you drifting higher over 7250, assuming you can get over 7275, would be kind of more supported, right? Like there would be more of a magnetism to a higher balance, probably around 7305, just like you would expect to sell down below to find a balance down at a stronger kind of magnet, so to speak. So that is what I would be looking at. Yeah, I mean, a lot of deuce talk this morning. If you have anxiety about your colon and bowels, maybe that's the way that you shake it out to start the day. For me, impulse control is just about patience and not reacting and being in control of myself. I think when I talked to you guys earlier about the idea of like holding a mirror up to yourself, what is your conviction? are you actually letting it get to the strike? Or are you getting antsy saying, oh, I really don't want to miss this move, so I'm going to get in now and I'll make my stop a little bit wider? You have to understand what's on the other side of that impulse, right? And if you're doing things that are at odds with your plan, you're setting yourself up for failure. It's kind of a loss in and of itself already. You have to be willing to miss some trades to stick to your plan, because your plan didn't allow for that when you first drew it up, right? My plan today isn't allowing for me to take a short at 72.30 unless we're actually breaking through it. I see volatility ramping and we reject a 72.30. I would rather short from higher than short just because we get down here. My initial expectation if we sell down to 72.30 is to watch for a potential bounce there, right? I'm not looking for a flush right through it unless volatility is like ramping. Okay, my initial reaction is to wait for a reaction there and then decide. So if I get in early and then it ramps right back up to 72.75, I'm going to be pissed that I didn't actually trade my plan because I got antsy or I couldn't fight my impulse. It's you versus you. It's not you versus the chart. It is you versus you. Am I in control or am I not? So, I mean, it seems really simple to say those things and making them actionable is something else, but I really, really believe that it is a you versus you battle. So whether you're following my trade, if I actually like signal something in the Discord, right? And somebody says, oh, I lost on that trade. I followed you, but I sized too heavy or whatever. That's the variable. That is the you variable. I manage my trade completely differently than you do because I am a different person. My mental makeup is different. My emotional makeup is different. So no matter what you're doing, what you're learning, who you're following, what strategy, ICT, the mastermind, using market maker positions, it's going to come down to you executing. So the idea that there's some magic bullet for everybody out there that's going to make them a better trader overnight is a falsehood, right? It's going to come down to you doing the thing that matters in the moment that it matters. So if you guys can't identify what that is for you, what matches up with your risk tolerance, what kind of trader are you? Are you happy with catching a 5-point move on big size, getting in and out quickly and being done for the day? And you have edge in that, and it matches with how you like to do things and like how you emotionally respond to the chart, and it won't make you tilt and just keep trading until you get a number and blow an account. Then do that thing. Do what matches your makeup, right? If you're still on the search for that, you know, it can be a long road, but the big thing is to just make sure you are always aware of yourself and what you are doing, right? What you are comfortable with, what you're willing to accept. Okay. Teresa, good morning. Yeah, don't worry about the drop and deuce commentary in the chat. We're going to scare some people away wondering what the hell we're talking about in here, right? All right, guys, let's see here. I want to look at one thing. I'm just going to double check and make sure we don't have anything too different coming in on the day. Again, I actually tend to think we are going to explore this range into the pre-market. I actually think we're going to go test up closer to 70, 75 before the open. I don't think there's any real risk of anything hitting before some of those data prints. I think any of our risk is actually in this zone, and we've held it pretty well here so far in the pre-market. So I would be keeping an eye on this kind of area, and the fact that we had chances to dip down in it to get lower and haven't kind of tells me that we're not really looking too weak. I think the signs are pointing for that upside test coming in on the day base case. We did take a little bit of a short here to start as an example for how I kind of put risk on for these trades, and we've since tightened it up and just not really looking for too much. Did we look at gold today? I have not, but we sure can right now. I think gold is obviously kind of making this level to level move here. I'm sure it's going to go for the 72 level from the looks of things, making some higher highs and higher lows. Could fail and get a reversal here, but I think it's safe to say that given everything else going on in the macro world with like yields and oil spiking, you could easily see gold get an extended run, but I personally am not trading it and have not touched it. I do think if you are using the levels indicator, you had some strong confluence here to define some risk and go long overnight. Like I said, higher highs, higher lows. This is on a 15-minute chart. If you look at the hourly, what are we doing there? Kind of look to be finding this double bottom-ish support. Where it goes from here, it's either making another lower high on the hourly, but it looks to me like it's going to get that 45.71 level test. Looks a bit imminent to me, at least. I know Jake is kind of the guy that's the big gold trader as of late, so I don't know that he would necessarily be longing this. I know he was looking to short it yesterday and kind of got screwed initially, if I remember right. But I do think that there is some opportunity there for level to level moves. Obviously, if you're looking at the indicator and where the potential is, you could short a rejection off this 45.71. But on this little hourly kind of counter long off the lower levels, a bit of a double bottom look, you could see some opportunity there depending on your view. But I don't have a strong opinion on gold either way. I do kind of wonder with yields doing what they're doing if we don't have some potential for a little rally in gold, especially with the yen showing some strength against the dollar. So not trying to get in the weeds on that stuff with you guys if you're not super interested or well versed in that world. Anyway, guys, thank you for joining. I keep seeing we've got some late joiners. My name is Mitch, kind of the gamma guy with the Rake Trades Network, so I'm happy for you guys to be here. Obviously, I focus primarily on SPX and ES. Our little kind of pre-market stab short, I tightened up the stop, is going to get closed out here, and that's fine. Like I said, my base case coming in is I do think we go for this 75 test. I'm more interested in what happens if and when we get there, not chasing a long up into it pre-market. So not going to take anything else on this eval right now. How do I wake up so early? It's kind of my job, you know, I got to do it. If I want to do this stream, this is my time. This is when I got to do it. No problem, Yayita. Thank you for engaging. Sinkhole de Mayo. See, do you guys have big plans? Are we celebrating Cinco de Mayo? I'm sure everybody's got a favorite Mexican joint they want to go hit up. Yeah, guys, I don't know. I'm just looking at vol here. Got a little momentum thing. It just doesn't look like we're going to get too much ramping. I don't think we sell off necessarily with volatility until we get some kind of definitive news on the whole Iran thing, but maybe these headlines clearing this morning. We do have some data shortly after the market open, I believe, about 30 minutes after the open. So we'll see what we get there. But I think the momentum in tech is strong, so it's hard to not see NQ wanting to break higher. You've got some positive news on like data center build out and things. We've got some strong earnings. So we'll see what we get. Obviously ES is lagging a little bit compared to NQ. So I do think this test higher towards 72.75 is kind of my main watch on the day. What we do going into the open, we've still got 2 hours before market opens, so we can easily move higher. If we move higher, there is a lot of room before things start getting a little clunky and slowed down. I mean, if you clear 73.05, for example, you've got this other upper range from like 73.30 up here. this is kind of your zone to move through or rapidly accelerate through if you got up there. So we'll see. If we end up opening kind of over yesterday's high and holding it, you could easily see an expansion of the range up over 7,300 potentially, before things kind of seem like they should start slowing down into this huge 30,000 contract position way up high, that again probably wants to sell you back down. I personally don't know that we break much higher than 7,300 on the day, but time will tell. When I trade options, what tickers do I trade? Victoria, I stick to SPX. SPX has a nice multiplier on it. It offers some great risk to reward. The other thing I'll do is trade XSP, which is like a SPY. It just is cash settled the same way that SPX is. So I don't have to worry about kind of the rapid decay. If I finish in the money, I kind of know exactly how much I'm going to make. So that is why I choose to leverage SPX and XSP versus SPY or anything else. Slept 2 hours and feel like trash. Well, there's your problem. 2 hours of sleep isn't good for anybody. Liz, do I use prop firms? Yes, I do. And zero date always, Victoria, unless I am hedging longer dated. My voice is low. I was trying not to like hump the mic here, so I asked earlier and everybody said it was okay. So I don't know if it's just you, or is that the case, guys? Am I too quiet for most of you? Bueller. Let me just double check here. Good to know. Thanks, Josh. We'll figure that one out if it is a problem. All right, see some new names in here. Esoteric T, thank you for being here. ZP, familiar face. Jason, thanks for joining. All right, good to know the audio is clear. What's funny is the music seemed to have dropped out halfway through, so I don't know if we got a copyright warning or what happened, but I was hoping we had some background music for you today, but evidently that is not working out right now. All good. First time joining Premarket. Well, thank you for being here. I know it's a little different. What I do is a little different. Obviously, I think a lot of people are used to tuning in for Jake bright and early. I start even earlier, and kind of what I'm looking to do, if you guys have not been here before, if you've seen any of my Instagram reels or anything that Jake and others in the 365 world have shared, what I do is I look at where market makers are holding positions and how they have to hedge it with futures. So rule of thumb, if the market makers are long, they're going to sell futures against those positions as we move into them. If they are short, they're going to go where the momentum goes. So identifying those ranges and kind of where the opportunity lies on the day is kind of the edge that I can provide for building a plan. So if you are looking at like market structure, especially if you lend a lot of weight to what the S&P 500 is doing and how things are going to move on ES, and maybe you primarily trade NQ and you want some confluence to say like, where am I looking for the risk on ES for the day? How might that affect me trading NQ or some of the other indices? Then I am the guy to watch, I guess. That being said, for today, if you're just tuning in a little late, we've kind of drawn our plan up for the day for where the ranges are to pay attention to. Kind of treating the 7250 on ES like our line in the sand. If we're over it, we're good to probe higher. If we're under it, we've got some risk down to 7230, and under 7230 is probably like the do or die spot for the day. If we are under that, we are at risk of going much lower. If we're holding there, we're probably looking back in this range where we're trying to break through 7275. So if you look back to yesterday's action, largely the same kind of range, right? Yesterday it was we tested to 75, failed to get over it, sold down to 40, the bottom gave out, and we ended up testing a little bit lower down towards the 7200-ish area. So I think the risks today are largely the same. The difference is we don't have a lot of conviction in the sizing to say that we have really, really strong support below us unless it's much lower, right? And we don't have really, really strong resistance above us until it's much higher. So where we go today, I think, is going to come down to kind of where the market largely decides we're going to go. So does that mean that NQ leads today because it's showing some strength and it's trying to break out? That could be the story, right? Where tech goes, we are going to follow is entirely possible. The question is going to be, how high does NQ go? I don't see anything to the left. We are flirting with those highs. Sky is kind of the limit potentially on NQ. The difference to me is, at least what I can see on ES, is something provable. I can see where there are some bets being placed and where that might either slow us down or accelerate us through. Okay. So with the morning, if I was trading NQ, I am kind of looking for what is ES doing around 75. And if it's pushing through, then I'm looking for another 25 points higher. I'm looking for 7,300 and what kind of a reaction we get. Where we go from there depends probably on how strong NQ is at new highs, and can we break over 73.05 with some juice? Because we have this little kind of range in between here where things normally, if these were a little bit bigger in size, I would say we'd grind. But you've got this area of acceleration and momentum potentially above 73.30. Again, the market's pricing in like a 30-point move right now. So where we open on the day is going to have a big say in how much higher or lower that range can go. All right. So if I was building a plan, as we get closer to the New York Open, I'm going to be looking at 72.75 for the 100th time this morning. If you've heard me say this already, my apologies. That seems to be the do or die. Do we get the upper range test or do we fail back down? Right? So it's really easy to say, I think we test that even into or before the market open. We've got 2 hours to get there. And I think that's entirely possible. We've already made a 30-point plus move overnight. So I am looking to see, what do we do when we get there? If we cover that, we've got momentum, right? That's a dealer short, meaning they will buy with the momentum. If we have a strong market bid, there's every reason to think we can test 73.05. And if we cover that, it might slow us down a little bit. But if the bid is strong, we've got a whole big old range. Nobody's betting the farm on anything above us until we get way the hell higher, right? Same thing with the lows. Nobody's really saying, I think we go lower until we get way lower. So there are big ranges in between. So today is a day to pay attention to the broader strength. Are there relative strength names in the tech sector? Do we think that sustains? Can NQ break out to new all-time highs, and does ES follow it? Just keep an eye on these strikes. What is ES doing at these strikes? Can it throw a wrench in the momentum on the day? That's how I would look at it. Snipe, got the legend in here. Thank you for joining, man. Appreciate it. Billy asked, do I trade gold? If not, why is that? I think I've kind of explained this a little bit earlier, so if you're just joining, you likely missed it. My edge is in this. My edge is in the most liquid thing in the world, which is ES and SPX correlation. So I trade that. I trade what I know, what I can see, what I can make a plan around, and I stick to it. So yeah, guys, if you're here, I appreciate you being here. Obviously, the views this early in the morning are a little less than some of our other streams. Not complaining, totally get it. I am happy you're here if you are. But if you are watching, please, please, please like and subscribe to the channel so we can grow. Obviously, Jake is doing a lot to support this out of his own pocket. So if you can just do the simple things, liking and subscribing to the channel. Again, my whole thing is trying to help you guys build a pre-market plan that you can leverage no matter what you look at, knowing how influential ES and SPX are to the broader market. All right, Com, thanks for joining, man. Appreciate it. J-Line, thank you for joining also. And yeah, so Jake can dye his hair, right? If we get to 50,000 subs here in the next couple months, which is a big ask, I think we can do it, obviously. but there's every reason to, want 100 accounts to be given away. That's the other bonus. So yeah, again, however you found us, if you're here, I very much appreciate you guys being here. It makes a big difference to me knowing that someone's watching. If I can help you, whether it's with a psych lesson, how I manage my trades or risk, I am happy to share that with you guys. I want to be of value. So if I can do that, let me know how if I'm not right now, right? All right. Let me see here. Paul, so I trade SPX options. Do I have a course or live trading to follow your trades? I love the analysis. Yeah, Paul, I would say we've got this link. Discord Mitch. So if you follow this link, you can join me. And then if you use code STREAM, then you can get a discount. And what I'll do is I basically follow up my morning analysis of ES and SPX through the day. If there's trades I'm kind of stalking, whether it's SPX like flies, spreads, naked calls or puts, I'll put them there. And then in that Discord is also the mastermind program, which is where I initially learned to trade before I kind of pivoted and started leveraging these market maker positions and understanding the Greeks and how they influence price action and the futures market. So yeah, if you want to join me there, you can certainly do that. If you check me out on Instagram too, I do a little more on the one-on-one side, coaching, whatever it is that you want to cover. And then we can also go more in depth about how I leverage the Greeks as far as Gamma, Vanna, Charm, and all the second, third order Greeks that are out there and how they interact with one another to kind of influence price. Yep. But yeah, if you use that WAP checkout plan there, you should be able to see it. So that one right under Snipe's message. And yeah, code STREAM is the one that'll give you the discount on the Discord. And again, guys, I'm not here to push that stuff. If that's something you want to pursue on your own, we're just giving you the ability to follow us there. Again, I'm happy to be here every day that I am available on YouTube for free. So you can use this as a resource. Trade, I would say 0 Date is playing with fire, but not if you know what you're doing. I think if you understand the risk of 0 Date, it is actually less risky because there are ways to do things like spreads or flies that can actually reduce the overall risk for you. Scalps are great, but if you don't want to have to guess, yeah, not for new people. If you're brand new to trading options, SPX is the last thing you should be touching. Go trade XSP instead. Less risk, same structure, same pay, given what you're leveraging, right? So rather than SPY kind of getting assigned depending on holding to close or whatever, XSP you can really stack a lot simpler. Because if you finish in the money, you know exactly what you're going to get paid when you finish in the money. So there are a lot of things that you can do. Yeah, if I'm swinging, I do not swing naked calls or puts on SPX anymore. I am truly looking at strategies like spreads. How much of a range do I want to target? How much am I willing to pay for it? Am I getting paid on volatility? If I'm going way out of the money? No, Daniel, I hear that so much and it's so infuriating to me. XSP does not have bad liquidity. Like sometimes, depending on the strikes you're picking, you might run into that situation, but largely speaking, not enough to matter, right? It's literally following SPX the same way. So I when I hear people complain about that, they're picking the wrong strikes more often than not. No offense to anybody who's maybe said that out loud, but that is not an issue for me. So. Ooh, we've got the dreaded 666 view count, guys. Maybe that's a sign I need to do the giveaway here soon. Get the engagement up. But yeah, guys, if you actually like the channel, make sure to use the thumbs up. I appreciate the hearts in the chat very much, the emojis. But if you want to actually like the channel itself, make sure to use the thumbs up icon, and we can get that going. All right, give me 1 second here. Danger, danger, danger. My OBS crashed. I'm not sure what happened there, but we are back. All right, let's see. Let's get a question in here. SPY is 1 penny wide, but not cash settled. That is correct. If I'm buying naked calls or puts, am I buying in the money, at the money, or out of the money? What I will be doing in those scenarios, Victoria, if I do go naked, is I'm playing not in the money, rarely ever. I'm pretty much like, I'm out the money, but by like at least a strike or two. Why I play spreads more often than not now is because I'm banking on price going through the strike that I buy, and at least two, if not through this one that I sell. So if I can define my risk and say, I know that no matter what, the most I can get paid is however many strikes I am covering. So if I have a 10 wide spread, I know that if SPX moves through one and to the other one and closes beyond it, the most I can make is 10, right? I can make $1,000 minus whatever premium I paid. So if I'm going to go out of the money, it's going to cheapen that for me. And obviously if I stick to like 5 to 10 wide, I might not make huge money, but my odds are going higher a little bit that I could finish both contracts in the money and get the max pay, right? So where I have the edge in my system is if I was going to long and I was going to take a spread and we opened right here, I'm going to buy the 72.75 and I'm going to sell the 72.85. Because if we clear 72.75, I have confidence we could extend to 73.05, where I can maximize the volatility of making the directional move, and I can potentially get the max pay if we close higher, or at least capture more of that range, and then I'm capturing most of that premium. And then the nice thing about a spread is you're actually able to manage like the dynamic risk, because you're not guessing about how much you could or not make. You know exactly what the absolute most you could make on that spread is, right? So what I will do, a lot of times, I touched on this earlier when someone asked about futures and SPX. I will take a directional futures trade, but then I will hedge it with an option strategy that says, if we fail here, I'll take a cheap 5 wide spread from 72.40 to 72.35. I might pay 50 cents for it, but if we make that move, I don't have to get all $5 for the length of that spread. But if I can capture $300-400 and I only risked 50, I take that every day. And at the least, it was a cheap hedge. If I made my directional bet and it was right to the upside, I don't care about that $50, right? So that's kind of what I do. Paul says, following profile order flow of ES for 0-date scalps. Yeah, I think there's a lot to be gleaned there. Yep, depending on your options, and you're picking the delta option based on what you're trading for. If you're looking for IV expansion and you're looking for the volatility of a move quickly to scalp, generally 30 to 20 delta is the most sensitive to that IV expansion. Those are the ones that you can like really make a lot on a little from, but they're also riskier in the sense of they decay that much faster if they go against you. So they're not the ones that you necessarily want to be holding very long for the Hail Mary play, but end of day, a 20 delta call or put can also be the thing. Like, 2 weeks ago, I signaled one in the Discord for somebody and I said, hey, I think we could squeeze. It actually kind of looked like this profile. End of the day, we were kind of testing right up under, let's say 72.70, like the shape. There was this strike right here. I knew that inside of the last hour, if we cleared that, we could actually squeeze pretty rapidly another 10 to 15 points. The straddle was only pricing in like an 8-point move. So if we got there, it's kind of like the options are mispriced. So you're getting paid on that kind of volatility. I bought that contract for literally like $75 or something, and it ended up going to 25. So I made 2,500 bucks and I only risked 75. And I did that by like 3 or 4 contracts, right? So like the potential of using this positioning information to make those options trades is hugely asymmetric. The whole point when you're trading options is asymmetry. You're looking to risk the smallest amount to make the biggest amount, right? Convexity. That is where options are your friend. If you can't think in those terms, you should not be trading them. So what Jake was saying the other day about futures on individual names being a huge game changer is likely going to be true for a lot of people. If they don't want to think about options and having to pick the right strike and the right expiry and pay the premium, the potential for that person to make more money actually trading the single name futures where there is no risk of theta and all of that, and it's truly just price action on the chart, futures is your game, right? Futures is about capturing points, high or low, right? Am I getting the direction? You can obviously trade futures options, right? But I don't think that's for most people. But if you are struggling with options, quit trading them if you can't get that part handled, right? Come to the futures world, focus on price action, look at buy and sell signals off levels, areas of interest. If you like what I do to better identify those zones, like which levels are stronger than others, then by all means, you can learn this strategy as well and layer it on top of what you're already doing. But most everything, guys, comes down to buy low, sell high, right? Sell high, buy low. That you don't need to reinvent the wheel, but knowing where those areas of opportunity are weighed in your favor is why I choose to look at what I look at, right? So confluence, if you guys are here and you're already using rake levels, if you're using volume profile or something, maybe we can do that. I think somebody just said they use volume profile. I don't really mess with it, but let's just take a look, right? So if we look at yesterday's price action, I think till here, pretty thin at the top of that move, right? But it looks like it held the low. And then you look at the overnight action. What did we hold? We held that kind of point of control. So if we're looking at the overnight action for volume from Globex to now, most of that has been traded at the highs, which is where things were thin yesterday. But we haven't tested yesterday's high, which lines up with 72.75. So if you're a volume person, you can say, well, that's a good sign. If we go further back to last week, to Friday, what does that look like? Okay, that lines up with 72.75 as well. So the positioning is reflective of where price seems to want to go. It tested there yesterday and failed. There wasn't enough to push through it. There's obviously interest from last week at that 72.75. Today, there are options bets at 72.75, telling us that is a key strike. That is a big level of interest. So you can look at all sorts of things to get confluence. The thing that I like about what I'm looking at, guys, and this is not to say anything else is wrong, is just very simple. I know definitively there are X amount of contracts, and I know that market makers, when price gets there, have to react. They're either going to reject it, or if price moves into it, they will continue the momentum through it. It will be a tailwind. It will be wind in my sails to try to go higher, right? So if I can look at this and have an edge and say, well, I think for sure we should test 85 if we cover 75, I could play for just 10 points right there. I could take a gamble and say, I'm going to give myself a 10-point stop, and I'm going to look for a 1R trade. If that's the kind of trader you are, there's your edge, right? I know that 85 might be a rejection spot. I'll take my 10-point scalp and be done. Or you could be someone who's saying, you know what? If we hold the opening print, I'm holding for 75, and I'm holding for a max move to 7,300, because that's that upper range, right? If you're doing that, more power to you. That's the kind of stuff I look for. I say, what kind of bigger range can I try to capture? Where is my opportunity? That's what I tend to look at. All right, guys, if you're just joining, my stream will be wrapping up here before too much longer, I believe. I think Jake is probably going to be on here in about 30 minutes or so. So I'm probably going to be looking to wrap up before too much longer. I did have on my screen that we have a giveaway, and it is going to be a 50K account from Lucid. So I think I am going to get things ready to get that giveaway started. I will let you know when we can get that going. Again, thank you for joining, however long you've been here today. Hopefully we were able to get some good information in your hands about where the potential is on the day. I'm going to go ahead and draw our ranges back out here, where the opportunities are, where the risks are on the day. Obviously, we have a few. And I don't think most of it is looking too attractive. The risk is obviously to the downside, guys, but the action seems to be wanting to go higher, right? Software issues with Top Step slippage. Yeah, I think if you can trade in a platform, I know that a lot of people, like for me, I really do like TradeC from Lucid. I believe TradeC is also available through Tradeify now. I guess I don't have experience with Top Step, Paul, so I can't really speak to that. I generally haven't had any issues, but yeah, I think you just got to find one that fits for you. I really have liked trading these Tradeify accounts. Hey, RSX, thanks for joining, man. Is anything like this study on Thinkorswim? Hassan, you can get the Greek information from your options chain. The difference is it's not going to tell you, like this is, coming from SIBO, how it's tagged, what is a market maker, what's a customer, what's a firm, what's a pro customer. That is the difference, is these other platforms will actually be able to discern what that tag is and then map it for you. So, morning CJ, thanks for joining. However you got here, guys, I appreciate you being here. We are going to get this giveaway started here. Give me just 1 minute. I will let you know how long that's going to go. I think we are going to give it about a 5-minute timer. Lucid Flex 50K account. All right. If you guys would like to go ahead, hit exclamation enter if you want to enter the raffle for the 50K Lucid Flex giveaway. All right. And we will give that away here in just a few minutes. Again, my name is Mitch. Thank you guys so much for joining and tuning in to the Rig Trades Network. This is Project 365. We will be here for an entire year. Every day, someone will be streaming to give you education, psychology help, strategy help. Not necessarily in the one-on-one sense. Some streams might be slower than others where we can do that. But for the most part, if you are here, you're here to learn, you're here to watch us trade, how we execute, what our strategy is, how we manage our risk, what our plans are. So if you're here doing that, appreciate you being here so much and supporting the channel if you can. If you would like to use code RAKE or RT at any of your favorite prop firms that you aren't winning a giveaway to, please do that. It helps support the channel. It helps us grow, get more reach, get more people involved, get more eyes for those who might need it. If you also can do the thumbs up to like the channel directly or subscribe to it, that would also be greatly appreciated. Don't necessarily have to like what I do or how I do it, but if you're here, I hope I can provide some value to you and make your trade plan a little more clear. So again, just to touch on that before we do the giveaway, my plan on the day is watching what we do at 72.75. If we can open and hold over 72.50, I think the odds of us testing higher and expanding the range higher are strong. I think if you're looking at NQ, very strong uptrend overnight. We got a couple 100-point range there, looking like it wants to break new all-time highs. ES is obviously lagging a little bit, but looks like it wants to at least test a couple of these higher strikes. The positioning says the bets are placed much, much higher or much, much lower. So it is up to you which side of the fence you want to place your bet on. If I was a betting man, I'm betting on upside with NQ showing the strength it is in the pre-market. I don't know how much I'm worried about the data prints coming in on the day, but I am a little wary of certain macro things out there like the yen carry and the 10-year and 30-year yields. I do think there's some macro stuff that's kind of flashing some warning signs. I also believe that volatility is extremely cheap. I don't know how much cheaper it can actually get. I do think that is worth paying attention to. It is a big factor in how I trade these positions and what I see, knowing what can accelerate the volatility and what should absorb it and slow it down. So that is how I look at things. If you're just joining, I'm going to throw this as well. Thin positions, no big bets unless it's on the edges or the extremes, okay? So what that tells me, guys, as a rule for myself, I am sized down on a day like today. I am expecting bigger moves. I am expecting rangy moves. I am not banking on big influence from hedges. I am banking on the market telling us exactly where it wants to go. Okay, so that is my takeaway on the day. There are small ranges and there are big ranges on the day. I still think 72.75 and how close we open to it is going to matter the most. So manage your risk accordingly. Okay, trade safe, trade smart. But I am definitely looking for some upside. I just think 72.50 is the line in the sand for higher on the day into the afternoon. See where we are post London close. I do think the risk is probably more like this. I think it's a 72.55 to 72.30, kind of the overnight range, which seems obvious. But I do think that's kind of where I would be looking. If we do sell down, do we hold here? You've got a rake level nearby to test back into the top of the range. I think the best case scenario for me at the open is going to be, can we test and hold the opening print? Can we break through 72.75 and get that upper range test in a hurry? I believe, Diana, that as long as you've hit enter, it is going to attribute it to you. My understanding is the chat doesn't always update with a ticket, but there are no restrictions. So if you are in there entering that ticket, you should be good. So I will give it another couple minutes here, guys. And if you are able to enter and get your ticket, we will do that giveaway here. I will give it till 7:10. Okay. And we will pick the winner. It'll do it automatically. It is completely random. There is no favoritism shown by me for all of you who have been here from the very beginning of the morning. So, yeah. Any questions here, guys, before I wrap things up? Whether it's about what I'm looking for, anything that you guys are dealing with, any questions you have coming into the market, prop firm related or otherwise, we can get those answered here while we wait for this giveaway. Otherwise, I do just want to say thank you again for joining. Hopefully, if you guys can join on my morning streams when I am available, we can make that more of a regular thing. Otherwise, again, we've got Jake the Goat coming up here in about 30 minutes, I believe, or less, who is going to take you into the New York Open and ride the wave of whatever we get there. He's hit some bangers lately for all of you gold people. I know Jake is a big gold trader, so see what he thinks about that move here this morning. Looks like it is on the up and up, probably headed towards that level at 70, it looks like, at the least. Maybe rejects, maybe reclaims that and gets going. I do think there's some macro headwinds for gold for sure coming up. But yeah, again, if you were here, thanks for being here. Let me just see if we can get this giveaway done so Jake can get going. Okay. All right, guys, we are calling it on the giveaway. I am going to close the entries and we are going to pick our winner. I've got John Barrows John Barrows, if you're in here, please claim your prize. And I think if you can hit me on Instagram, sorry, Jake, I just saw your text if you're watching. Hit me up on Instagram here, John. I just want a confirmation, John. Can you respond in the chat here? John Barrows, please ping me. There we go. Hit me up on that Instagram link right there. Send me a DM, screenshot this chat and shoot me a DM, and we'll get you that 50K code, okay? All right, guys, that is going to be it for me. I'm wrapping it up. Once again, my name is Mitch with Project 365. You've got Jake coming up here shortly, so make sure you stay tuned for Jake's New York Open. Have a great session. If you guys are on the Discord, join me there. I'll send my updates. If not, I'll do it on Instagram as well at the end of the day, and we'll see how this pre-market plan worked out for us, all right? Trade safe. Take care. Thanks again for joining, and have a good day.